Charlie Munger likes to say that you don't make money when you buy stocks, and you don't make money when you sell stocks. You make money by waiting. And so the single biggest advantage a value investor has is not IQ, it's patience and waiting for the right pitch, and waiting for many years for the right pitch.
So what's that saying of Pascal that you like about just sitting in the room?
All man's miseries stem from his inability to sit in a room alone and do nothing. And all I'd like to do to adapt Pascal is all investment managers' miseries stem from their inability to sit alone in a room and do nothing.
So you don't feel the need to pick 10 stocks a quarter or one stock a quarter, just what turns up?
Actually, I think that the way the investment business is set up, it's actually set up the wrong way. The correct way to set it up is to have gentlemen of leisure who go about their leisurely tasks, and when the world is severely fearful is when they put their leisurely tasks aside and go to work. That would be the ideal way to set up the investment business.
Does this tie into your ideas and other value investors' ideas of low risk, high uncertainty?
That's right. I think the low risk, high uncertainty is really something I borrowed from entrepreneurs and the Patels in India or the Richard Bransons of the world. Basically, if you study entrepreneurs, there is a misnomer. People think that entrepreneurs take risk. And they get rewarded because they take risk. In reality, entrepreneurs do everything they can to minimize risk. They are not interested in taking risk. They want free lunches, and they go after free lunches. And so if you study any number of entrepreneurs, from Ray Kroc to Herb Schultz at Starbucks, and to even Buffett and Munger and so on, what you'll find is that they have repeatedly made bets which are low risk bets, which have high return possibilities. So they're not going high risk, high return, they're going low risk, high return. And even with Bill Gates, for example, the total amount of capital that ever went into Microsoft was less than 50,000 between the time it started and today. That's the total amount of capital that went into the company. So Microsoft, you cannot say was a high risk venture because there was no capital deployed. But it had high uncertainty. Bill Gates could have gone bankrupt, or Bill Gates could have ended up the wealthiest person on the Forbes 400. And he ended up at the extreme end of the bell curve, and that's fine. But he did not take risk to get there. He was comfortable with uncertainty. So entrepreneurs are great at dealing with uncertainty and also very good at minimizing risk. That's the classic great entrepreneur.